So let's take a moment and compare compilations with reviews and then compare reviews with audits. So let's say you have a client that comes into your office. They know they need some type of help, but they're not really sure what it is. Maybe they've been to the bank and the bank has told the client that they need financial statements from a CPA firm. So the lowest level of these three would be a compilation, and in a compilation you are providing no assurance in reference to the financial statements. If you look at ARC 80 in the SSARS standards, it tells you that the only thing you're really required to do is to read the financial statements to see if they appear to be appropriate. And so there's really not a lot involved in issuing a compilation report. So normally you would prepare the financial statements and then you'd read those statements to see whether or not they appear to be appropriate. And again, the report says that you are providing no assurance. Now, you might say this to the client might say to you, well, I think the banker wants some type of assurance. Well, then you would step up either to a review or an audit, and let's talk for a minute about a review engagement. So in a review, you are providing what the standards refer to as limited assurance. And the basis for that limited assurance is that you are asking questions about the financial statements. So you look at the financial statements, you might be comparing those numbers with the prior year or maybe several years, and then you're asking the client, hey, why did your profit margin go down by 5%, for example? So you are asking questions. The standard uses the word inquiry. So you ask questions, and then the other thing you're doing in a review engagement is you're creating analytics. The analytics can simply be a comparison of the current year numbers with the prior year numbers, or it could be that you're computing key ratios such as inventory turnover, such as the quick ratio. So you get to decide as a CPA performing the review engagement whether or not you're just going to compare numbers with the prior years or you're going to use key ratios. But the important thing here is as you create the analytics, you're trying to create a basis for giving that limited assurance. And so you want to focus on the numbers that are really important, and then you ask questions, you create the analytics, and that will be the basis for providing the review report. So the other key piece, at least to me, in the review engagement is that you're also required to obtain a representation letter. In a compilation, there's no representation letter requirement. In a review engagement, you must obtain a representation letter. The other thing in a review engagement, the client has to attach full disclosures to the financial statements. In a compilation, you can omit all disclosures. In a review engagement, those financial statements must possess the full set of notes that goes along with the basic financial statement. So all of that would come together, then you'd ask questions, you perform the analytics, you get your representation letter, and then you could issue the review report. And of course that would be attached to the front of the financial statements. Now, let's say you tell the client about this limited assurance option with a review engagement and they go, no, I think the bank's looking for really high assurance. And this is where you would offer to perform an audit. And in the audit, you are providing high assurance. Now, you're never providing absolute assurance, but you are providing high assurance. And in the audit opinion, it says that you're providing reasonable assurance. So you never provide 100% assurance in an audit. So what's the difference in an audit in terms of procedures and the review engagement? Well, we said on the review, we're asking questions, we're creating analytics. In an audit, one of the key changes or key differences to me is that you will perform a risk assessment on the front side of that engagement. So as you do the audit, you're doing walkthroughs of key transaction cycles. You're looking at the relevant assertions. You're looking at material balances. And as you do all of this, you're providing a basis for the risk assessment, and the risk assessment becomes the basis for the audit plan, or what some people refer to as audit programs. And then the actual procedures that you perform in an audit are really at a much higher level than those in a review engagement. In an audit, you could perform a test of details, such as a search for unrecorded liabilities, such as testing bank reconciliations. You can also do substantive analytics. So in an audit, you really can possibly have 3 different sets of analytics. In a review, there's just one, but in an audit, there could be planning analytics and then final analytics. So that's required in all audits. And then in between those, you can also do substantive analytics as a part of your response to the risk that you identify in the risk assessment process. You can also, in an audit, test controls for effectiveness, and that would be another potential response in your risk assessment. So if you look at the controls and they're strong, then you could test those controls for effectiveness as a basis for the audit opinion. So what I'm saying in an audit is you could do a test of details, you could do substantive analytics, you could also test controls for effectiveness. You're not doing those types of procedures in a review engagement. So a review is much, much easier. Sometimes people will ask me, well, if an audit takes 200 hours, how much time would a review take? And you never can give a hard and fast number on that, but just to give you some idea, if an audit takes 200 hours, then it might take 50 hours to do the review engagement. And so the review could potentially be 50% or less of the time it would take to do an audit, and therefore 50% or less in terms of cost to your client. So once you do the audit, you do the risk assessment, you perform these substantive responses, you test controls if you choose to do that, and then you get a representation letter in this type of engagement as well. And then there's some other requirements in an audit that you would not have to do in a review engagement, such as communications to those charged with governance. So that's a requirement from SAS 114, and you have to do that in an audit. There's no option for that. So those are the key differences in a compilation, a review, and an audit. Real quickly, on a compilation, there's no assurance. You simply read the financial statements to see if they are appropriate. In a review engagement, you're asking questions, you're creating analytics to compare numbers, to look at key ratios as a basis for your limited assurance. And then finally, in an audit, you're really going as far as you can go. You're doing risk assessment, you're doing walkthroughs, you're gaining an understanding of the entity, you're doing things like retrospective reviews on estimates, you're doing things like fraud inquiries, and then you bring that all together to create your risk assessment documentation. The risk assessment then informs the audit procedures that you would perform in the audit engagement. And then again, you're doing much more detailed work in the form of a test of details, substantive analytics, and potentially a test of controls for effectiveness. We go from no assurance to limited assurance to high assurance, going from a compilation to a review to an audit. So I hope that helps. Take care and bye now.